Hello there, business professionals. Today, I'm diving into a topic that's sure to impact your business strategies and financial planning: UAE's new corporate tax. Why did the UAE introduce this tax in 2023? Let's break it down. First off, the UAE introduced a corporate tax to align with global standards. The Organization for Economic Cooperation and Development, or OECD, has been pushing for greater tax transparency and the elimination of harmful tax practices. By implementing a corporate tax, the UAE is positioning itself as a responsible global business hub, adhering to these international norms. This move not only enhances its reputation but also makes it more attractive to foreign investors. Now let's talk about diversification of revenue sources. Historically, the UAE's economy has heavily relied on oil revenues, but oil prices can be unpredictable, right? So, the introduction of corporate tax is part of a broader strategy to generate revenue from various sectors. This helps reduce dependency on oil and stabilizes the economy against those pesky price fluctuations. Smart move, don't you think? Next up, attracting foreign investment. The new corporate tax regime aims to create a more predictable and stable business environment. Clear tax regulations can be a big draw for multinational corporations and foreign investors. They want a transparent regulatory framework that aligns with their home country's compliance requirements, and the UAE is delivering just that. And of course, enhancing compliance and ethical business practices. The introduction of corporate tax is a strong signal of the UAE's commitment to fair taxation principles. This move is expected to strengthen compliance among businesses, ensuring they contribute to the national economy. It's all about fostering an ethical business environment, which is crucial for long-term growth and sustainability. So, how is this corporate tax structured? The tax will be levied at a standard rate of 9% on profits exceeding AED 375,000, which is roughly USD 102,000. However, businesses in certain free zones might benefit from exemptions or lower rates, depending on specific conditions. Plus, the law includes provisions for anti-avoidance measures and transfer pricing regulations to prevent tax evasion. This ensures fair taxation practices across different business sectors. In summary, the UAE's introduction of corporate tax in 2023 is a significant shift in its fiscal policy. It's all about aligning with international standards, diversifying revenue sources, attracting foreign investment, and promoting ethical business practices. This strategic move reflects the UAE's commitment to evolving its economic landscape in response to global trends and challenges. Thanks for tuning in, and don't forget to like, subscribe, and click the bell icon for more insightful content. See you in the next video.